Good evening, everybody. Welcome back to Monitor Farm Mondays for those that have been joining us through the winter. And if this is the first time for you, a very warm welcome especially. We hope you enjoy it. My name is Philip Dolbear. I am HDB's Knowledge Exchange Manager based in the Southwest, and I'm helping run this evening. In the background, very grateful to Christian and Nat to hopefully turning the cogs and will ensure everything runs smoothly. So much appreciation in advance. The thing we need to think about is some housekeeping. For those of you in before, there's one or two things I need to point out just quickly. You are all on mute, so we can't hear what you say, but we do welcome questions. There's the chat function on the right-hand side of your screen there. Put in questions there and we'll address those at the end. I'm hoping to leave plenty of time for that. It says 8 o'clock there, but we have stretched a bit to 8:15 because I think on experience we'll probably need a bit of extra time. So just to be aware, we'll be going a bit beyond 8 o'clock. Basis and EROSA points are available for tonight's meeting. Just a reminder, how to get those, either email me and we'll give you my email address later, or put your details in the chat function there again on the right hand side. And a reminder, for bases, we need name, account number, and postcode. And for EROSA, we need name, membership number, date of birth, and postcode. Just to say also that we'll be recording this webinar tonight, and we will be putting that on our YouTube channel. So there'll be plenty of opportunity to go back and listen to points again if there's anything you want to, as I say, refresh your memory of what was said. And of course, if you can't stay all the way through the evening, catch up later with the ending. And as is the way these days, we are on social media, so please feel free to tweet away and use #MonitorFarm and Monitor Farm Monday, and always glad to see the word being spread by that avenue. As I said, this is a series of Monitor Farm Mondays. This is tonight's subject on grain marketing. Next week we move on to data management, which is an interesting subject, to say the very least, and one which I'm very dear to my heart in terms of trying to save time using technology. And then there's 2 more after that before the end of the season. Next slide, please, Ashley. Just a reminder as well, this is getting towards the end of the winter and the Monitor Farms meeting season, so to speak. Clearly, it's been a winter like no other winter meetings sessions, all being digital, but we have got our Monitor Farm survey running, and be really grateful if you could spend some time going to that link there and giving your feedback on how you found this winter's output from cereals and oilseeds. And hopefully as a bit of incentive, there is the opportunity to win a hamper for one of the people completing the hamper. So please do go ahead and do that. So tonight we're on the subject of grain marketing, and as usual on Monitor Farm Mondays, we draw in the experience and stories of some of our monitor farmers around the country. Tonight I'm delighted to be joined by Ashley Jones from Cornwall, Saltash in Cornwall, and he'll be speaking later, and also Rick Davies from the Northampton Monitor Farm. Sure, I won't mind me saying this, but we're very, very pleased to have Rick with us tonight, not least because he broke his leg over the weekend, and if the camera was a bit low, you would see a very handsome plaster cast. So well done, Rick, for making it tonight, and I was very grateful for you to do that. And last but not least, then we'll actually kick off with him. Our first speaker will be David Eudall, who's our head of Arable Systems. So we'll get cracking. My idea for tonight is we'll work through our 3 speakers and hear their thoughts and views, and then we'll leave plenty of time at the end for questions between ourselves, and we hope also, as I said, you'll contribute to that through the chat box. So we know there's a lot going on. We're asking ourselves all sorts of questions in the future, and not least, as we go to the next slide, Christian, there's plenty of information about grain marketing, which is, to say the least, confusing at times, but we hope we're going to straighten some of that out tonight and get some clear direction going forward. Next slide, Christian. It would be remiss of me not to mention, of course, that before we market it, we really ought to be knowing what the costs of our grain are to produce. And for those who've heard me before, I really passionately believe this is so important. And AHDB has got Farm Bench, and it's a really critical tool to use to find out your cost of production, and then use those in comparison with others in groups around the country. This and other tools like the Brexit Impact Calculator, another one which is very topical at the moment, are all there on our website for you to use. So please make use of those facilities. Before we kick off tonight, I thought it'd be useful if we held a few sort of quick polls to get a sort of sound check on where you as listeners are on your grain marketing. 3 questions, which they're just starting to come up there now. And to vote on these, you click on the dot on the screen, and it will automatically show you register your vote. So the first question is, if you've still got crop in the barn to sell, what's your thoughts at the moment? Are you going to get rid of it now with the prices prevailing and relax for the rest of the year, or are you going to wait and see, or are you going to get even more information even later into the season, and if you can hold the grain and market it later? So if you'd all like to click away and vote there now, we'll see, we'll get an instant answer back when you've finished doing that. We've got nearly 170 odd people listening to us tonight, so it'll just take a few seconds to work through, and Christian will kindly flash that up when he can see the majority have had their say. There we are. So it looks like a fairly strong majority. Well, I don't know, it's a bit of a Brexit majority, isn't it, if I'm honest? Just in favour of selling now, but clearly people are starting to think about doing it sooner or later, because well over 90% of you will have sorted your marketing out by springtime. So our second question relates to looking ahead a bit for the crop that's in the ground now, just starting to wake up after the winter, perhaps, for this summer. So what are your thoughts on marketing for the summer ahead? And based on your normal average yield, what have you done in terms of marketing so far? Have you marketed anything, or a third, or up to 2/3, or even more than 2/3? So again, if you kindly click on the button of choice, we'll get a snapshot of people's thinking on that question. And again, quite a few haven't marketed anything yet, which is interesting, but a third of you, well, half of you, sorry, have marketed up to 1/3 already. So quite a bit of marketing being done already, which I'm sure David will pick up on it in a minute. And we'll move on to our last question, which looks even further ahead than this year's harvest. So looking forward to 2022, who's done any marketing so far for 2022? Hopefully that will be a fairly quick one to get the response to. I'm guessing a few will have done, but we obviously haven't asked what sort of percentages you've sold ahead. And the scores on the door, oh no, tell a lie. Very few people have actually committed any grain for the 2022 harvest yet. So maybe that's something that we'll pick up on. Okay, so without further ado, I'm very conscious I want to try and keep on time tonight. We'll move through to David Eudall. David's our head of Arable analysts, based in Stoneleigh, or obviously home working at the moment. But for those of you who've met and heard David before, he's very experienced in the grain marketing world, and very clear thinking as well in his logic and forward thinking. So we're looking forward to hear, David, your thoughts on the current position and going forward as well. So without further ado, David, we'll hand over to you. If he's there.
Over to you, David. I know you just got, yeah, sorry, go on.
Yeah, sorry everyone. I've hastily relocated from my room upstairs to my living room, so I apologise because I'm closer to my internet router, which seemingly was dropping out. So that's why I look ominously in the shadows, because I hadn't prepared my normal lighting rig to give me my best view this evening, so you'll have to bear with me. But thank you anyway. And thank you, Philip, for the introduction. It'll be interesting to go through the results of the poll later on. And I guess I wanted to spend sort of 10 or 15 minutes at the start now to discuss a few key things and kind of some ideas and thoughts around marketing of grain, and coming at it more from the kind of psychology and emotive side of things rather than market drivers themselves. Actually having a discussion about why we make the decisions that we do and what drives those decisions. How do we get to the right decision at the end of that process? So next slide, please, Christian, we move on. So what we're looking at here is a little bit of psychology in terms of prices and where we perceive them. So we're looking at the November futures markets and what's traded for the past 5 or 6 years, and I've kind of banded them into certain areas that we'll talk through now. So if you just click onto the first animation, Christian. And what we've got here at the top is prices over 180 quid. Now, to be honest, let's face it, at this kind of level, we are just talking simply about greed. You can't really go wrong at these kind of levels. We're talking about high prices, something severely has gone wrong in the world with supply for prices to be up here. So, you know, we're talking about positives. And these are the areas where people go, oh, it's going to go to 250, it's going to go to 300 pounds, and everyone gets all excited. And they actually kind of miss the point of this is the real opportunity. And when the market goes to these high levels, actually, this is the time when you should be taking it at its most serious, because it's providing you the most opportunity. And we all get greedy and we want to get the most of something as we possibly can. But this is the real key critical time at these high levels. And the next click, please, Christian. And then we've got this kind of middle level of what's a good price, that 150 to 180 pound a tonne range. Realistically, we know that this is a profitable level for the majority, unless you're in exceptional circumstances, and in some years where we've had extremely poor weather or quality that's been impacting the yield. And the question always here is, from a sort of farmer psychology point of view, well, is it going to go higher? You're at these levels where it's, is it going to go to 200? That psychological barrier, is it going to go there? That's kind of the key question that's in people's minds. And then we have the next level down, Christian, if you could click again, which is the, oh crap, what do I do next kind of level. This is that point where you get that sinking feeling when the price is around 125, 130 pounds a tonne, and you're realizing it's right bang on the cost of production. What do I do? And you almost hesitate to make a decision through fear of the wrong decision. And again, this is the key time when I think we're talking about grain marketing to be around the different tools and options and strategies that are available. This is the point where you want to be making a decision, realizing that you have opportunities to make a second and third decision to get back into the market or protect the sale or lack of sale that you've made. And the final one, Christian, please, which is that complete heads in the sand, being an ostrich. You know, the price is at below 120 quid. So we're just going to go spraying and ignore it and hope it gets better in the future. And to a degree, in some instances, you know, that's probably the best thing to do at those kind of levels. But all the way through here, and all of these price levels it's around why are we making the decisions that we make? Why are we not selling when the market is at £200 X farm? Why are we selling when the market is at £140 X farm? And then why are we not making a decision to then protect that? And I think that's the key thing. It's the balance between the two as to when to make a decision and when to protect the decision. That's the key thing from a psychological point of view. Next slide, please, Christian. So what I've put here is something that Philip has to put together, which is looking at marketing timelines and just sort of where we are in the current world. So what we're looking at is the completion of the November 2020 futures contract in blue. We then have the November 21 futures contract in that lovely olive green color, and then the November 22 contract in the sort of bluey grey color at the bottom. And we know that in the current season, we've got about 4 months of the season left. Prices are quite high, so we're relatively comfortable with that. For Nov 21, we've got about 18 months of the full season left, and prices again are historically high for this time of year, looking that far ahead. And so is the Nov 22 contract, when we've got a full 26 months all the way through. And realistically, you know, as we've said before, we have 3 years really market a crop from the start of that futures contract being traded for November all the way through past that November, past the harvest, going through into the new year and all the way to the June period of that season. So you've got 3 years to market a crop, and it's very difficult in some ways, I think, thinking of the context of that, because we're talking about something that's quite challenging. And I realise when I'm talking about all of this that, you know, I spend most of my days dealing with my team who are looking at this information, whereas when we're talking to growers and we're talking to farmers and we're talking to businesses, this is only one small part of your day. You're an economist, you're a biologist, you're a chemist, you're a people manager. You have obviously your own, you know, families and lives to deal with as well. So we can't expect that time can be devoted to the full marketing of this over that 3-year period, which again comes to that psychology of things, of making decisions and when is the best time to make a decision. Is it purely based on price, or is it purely based on other factors? And I think that's a key thing that we'll look at in a minute, is to what can make those decisions easier and what can help to get to that right decision. But I think the key thing that I wanted to say here is just the length of time that we have, and that's, you know, a long time. And it's the kind of thing where even though you've got 3 years, as we're talking about there, to market a crop, that doesn't mean 3 years of action. That could be a willing and knowing pause to decide, you know what, I'm going to wait and see what happens with this market, and knowing that there's a full length of time all the way through, especially when you look at something like the November 22 contract, where there's a full 26 months left. That's a long time for an event to happen, to push prices higher, and that's really what we're talking about here. Will an event happen at significant levels to push prices higher? Because that's really what everyone wants to know. Next slide, please, Christian. So as I said then, talking about length of time and how to make decisions. There's obviously a few different things that we can do once that sale has been made, or even before a sale has been made. I'm not going to go through all the details now, but I think it's one of those ones where, you know, we've just got to understand that these options are available. And I suppose from my point of view, again, it's easy for me to say this with the time and knowledge that I have to be able to talk about call options and buyback contracts, etc. But realistically, as an industry and as a farming group, you know, we're in a period where we're going to be losing direct subsidies over the next 3 years. They're going to steadily start eroding, and the ability to market grain and the profit from market grain is going to be ever more important as we go forward. These are things that actually will be really useful and able to protect your farming business as we go forward, looking at different types of options, whether it be a call option where you can gain if the market rises once you've made a sale, or a put option where the market falls and you then gain, or even such things as buyback contracts, which a lot more merchants are doing, where essentially you make a sale and the market starts to rise and you just buy that grain back to get back into the market. And as I say, it's like getting Casino Royale, where James Bond buys his way back onto the poker table. That's all you're doing, is you're kind of buying your way back in, as it says. And I think this is the key thing to think about. And I guess the almost, I suppose, kind of like education for your own mentality of selling grain in a way. But there is other decisions that can be made. Selling grain isn't as simple as just a yes or no on the day. There's a lot of the factors that come into it as well. And you can do things after that event as well. Next slide, Christian, please. And I think, again, as I said earlier, the key thing that we wanted to talk about was that psychological element. And I think that's a key thing, is understanding your own psychology and understanding your own level of risk aversion. And you can start in really simple ways through you know, understanding the market. And you know, we as AHDB provide a lot of market information. But I would say that, from my point of view, I'm a great believer in the theory of crowds, that the more information you get from the more people, you will get a better view as what is happening. So when you're looking at marketing grain, you want to be talking to the merchants that you usually trade with. You want to be talking to people within your social group, coming to discussions such as this and other discussions to talk about what's happening in the market, you know, looking at services that AHDB and others provide to give impartial information, to understand that whole view as to what's happening. And I think a key thing that I've spoken to a lot of farmers about this, and I think that the key thing with helping your own psychology is really simple factors that you can do. And the first one of those is just to write down every time you make a selling decision why you made that decision, or why you didn't sell on a day and what the driver was. So you've got a full view and almost like a chronological timeline from when you've planted the crop or before as to why you've made a decision and why you've not made a decision. And when you then look back at, 6 months ago when you sold grain and now you're kicking yourself that the market's gone higher, you know at that point there was a valid reason why you made that decision and you were making it for your business, and that's the best reason. And I think, again, it comes back to that psychological aspect of understanding yourself, understanding your own risk profile. If the very thought of what we're talking about here is keeping you awake at night, and even the thought of is speaking to a grain buyer or speaking to a merchant is something that worries you and concerns you, in a way, your own understanding of that and your own appreciation of that is a good thing, because if you're more aware of what is driving your decisions, you will make better decisions, and you won't be either making decisions for the wrong reasons or making decisions for what you think is someone else rather than for yourself. And I think the key thing, again, coming back to that theory of crowds element, is to do, as I've said there on the right hand side, to trade aware and trade with multiple parties and multiple ways of trading. It's a bit of a cliche, but not putting all of your eggs in one basket or one way of trading is definitely the right thing to do. Having flexibility and having different options is definitely something that will help to protect your business as we go forward. Next slide, please, Christian. Very quickly, as a question that was asked to me recently, someone asked me how a November 22 price is worked out. And the equation is pretty simple, but there's a couple of little nuances with it that are very interesting. So the November 22 ex-farm price is calculated in exactly the same way as any other. We have our futures price, we add on a delivered premium, say £2 over futures in East Anglia, £5–6 over futures in Yorkshire. We then deduct haulage from that, and we have an ex-farm price. Pretty simple to get there. But the thing with the November 22 futures is, because they're so far away, they're not trading every day and they're not trading in volume every day. So when we're looking at the closing price, you might think, oh, it's closed at, as it says here, 160. That's a good price. I'll try and sell some of that. But then you go to the merchant and you're suddenly getting bid £2 below what you expect. And the reason for that is the price on the day will be priced from the bid on the futures market, not the closing of the previous day. And that's for the reason that far in advance, when we're talking about trading something 20 months in advance almost, there isn't anything physical to trade. So the merchant on the other side of it will be hedging that purely on futures. And because it's not a very liquid market, if you go to a merchant and say, well, I want to sell you 1,000 tons, and they're going to buy that from you, then they want to sell something to hedge that for November 22, and futures is the only thing. They can put an offer into the market, as the example says there, 162, to try and get it on and try to get something to trade. But if you want to trade something, and the quickest way to do that is to sell the bid, and that's why futures that far in advance, and that's why ex-farm prices that far in advance are more going to be priced off of the bid of the futures rather than where it closes in a very illiquid market. Next slide even, please, Christian. To kind of finish up, just a couple of slides to talk about where the market is at the moment, because it's something we always get asked about. I'm not going to go into a huge amount of detail here, really, or more just sort of the headlines as to what's going on. So from an old crop point of view, as I say there, it's really just a competition of your own level of greed and how much you want at the moment. Prices have been trading well over £200 for futures. A lot of people have been selling at those levels. Even though we've seen a drop off in recent weeks, it's still relatively strong. It's a very tight market. It's going to be very tight at the end of the season with zero stocks. So I'd expect that cash prices are going to remain firm for the rest of the season. But there is a risk of an early EU harvest and a big EU harvest if we get good weather that could undercut that UK market at the end of the season. We see earlier harvests in southeastern Europe and France. You could easily see French coaster vessels coming into the country at that really tight end of July, first half August kind of time. And as soon as they start coming in, that old crop market will collapse. For the new crop, we're seeing some high prices at the moment, which have been created because of the old crop supply tension. We're expecting a bit of a bigger EU crop, but there's still some uncertainty over Russia. I think the sentiment of the market at the moment will still be bubbling on for a while, so I'm not expecting new crop prices to fall off the edge of a cliff, especially because we're still seeing continued strong Chinese demand, and I think that will keep the overall commodity complex underpinned for a while. There could be a bit of a leveling off in prices, and I'm very conscious of a spike in prices in the spring. We're going out of a season with very tight stocks. European stocks are going to be very low for weeks. Global maize stocks are going to be reduced as well. So there's a lot of uncertainty from the market in terms of overall supply. If we see any level of weather impact to spring crops, and I'm sure there'll be a bit of a market reaction in that April-May time. And then for new crop in 22, as I said, historically prices are very good. This far out, there isn't really any fundamentals to base anything off of, but that's the point really where we've got to be thinking about losing our basic payment scheme subsidies coming in. So even though it's that far in advance and there isn't anything to really work off at the moment, having a conscious understanding of what that price is and thinking of your cash flow impact that far in advance is going to be really important. Next slide, please, Christian. And I always get asked when we do these kind of things, what would you do? Now, I'm thinking it's 26 minutes past 7, so it's past the 5 p.m. watershed. Therefore, I've kind of finished work for the day. So I'm just going to kind of move my AHDB self to one side and give you an opinion of what I would do from me personally if I was trading grain. So if my boss is watching, don't sack me in the morning for doing this. So my caveat to this is I'm assuming I've not sold anything at all so far, and we're just going to talk about, you know, selling a shed and having something out. So for old crop, you know, if I've not sold anything too far, I'm probably just going to be quite smug about it, aren't I really? So I'd just sell about 80% of what I've got, get it out, and keep the remaining 20% as a just to see what happens at the end of the marketing year kind of thing. Probably take a holiday if I could, but can't really do that, so I'll just be driving around the farm for a while. For new crop, anything over sort of 160, I'd probably be looking to sell about 30 to 40% for October, just because it's good values. And then again, I'd be thinking about how can I protect that kind of market. I'd be keeping an eye on spring weather. If it all looks good in early April, then I might be thinking to sell a bit more. But since I wrote these slides, there's been some early rumours of an ethanol plant, a quite large ethanol plant up in Yorkshire, potentially coming back online further down the year. If that happens, I think we'll have a very tight domestic supply and demand next year. If that pushes us to import parity as we have this year, then it could be a bit supportive. So I think getting some sales on the board just to have a line in the sand will be worthwhile. But I'd be looking, if the market drops below 150, probably to sell a bit, and then to be looking at call options at lower prices just to gain if we see any further rises. And then for new crop, I'd be looking to sell up to 20% of what my sort of worst case scenario expected yield would be, just because prices, you know, this far away from that harvest are historically good and high. And I know I'll be losing, you know, 20% of my income from BPS around that time. So I just need to take my marketing more seriously. So again, don't fire me for giving my thoughts on what I'd actually do, but I know it's the question we always get asked. So next slide, please, Christian. And as ever, as I say, it's a bit of a question for everyone to provide feedback to us, and a bit of a shameless plug for what we do. We are really interested to know more about what our levy payers and what our audience want. So, you know, my contact details are there if anyone wants to have a chat about what we do and what kind of information we provide and what else we could do. And we really do want to learn what we could actually provide and new ways that we could do things and what we're missing, that sort of niche of what we're missing. Because we do have a really good audience for what we're publishing. Our weekly market report is going to over 7,000 people each week. Our Grain Market Daily, delivered on a Tuesday to Friday, is going to 2,500 people. We are generating around 20% of all the website traffic that goes to AHDB. We have about 100,000 web hits a month to everything that we're publishing. So, you know, we want to get some feedback and generate some positivity about everything that we're doing and seeing what we could change and what we could develop. So that's my shameless plug. So apologies, Philip, for dropping that in. I think that's everything from me. I'll hand back over to you, Philip, and we'll carry on.
David, thank you very much. That's a great start to the evening, and two things that come to the front of it for me are time and psychology, which we'll no doubt unpick a little bit more in a minute. Now, of course, if this was a normal Monitor Farm meeting in normal times, we'd be talking to the Monitor farmer and talking about their philosophy and policy on farm and using that as a basis to discuss and debate it. Well, we are going to do that, but the beauty is we can do it twice tonight, because being digital, we can be in two places at once. So delighted now, we'll move on to Ashley Jones just to kick us off, and Ashley will just briefly summarise his farm and then talk about his strategy down at Saltash in Cornwall there. Ashley, over to you.
Excellent. Thank you, Philip. Excellent start, David. Could we have the next slide, please, Christian? Excellent. Right, so I'm, for you who don't know me, I rent a farm from the Duchy of Cornwall. We're about 195 hectares. We're based down just outside Saltash in Cornwall. We're a mixed farm with sheep, beef and arable. We've also got a few diversifications, which are farmhouse, B&B, the amazing Cornish maize. We also run a small contracting company and agronomy services alongside the arable operations we do, and we currently have, alongside our arable enterprises, about 150 hectares of stubble to stubble contracts. Next slide, please, Christian. Yeah, so everything we do here on the farm all has its part in the business. We're not a huge farm, so we do need to have some diversifications into non-agricultural enterprises. Here we've got the contracting. We've also got a new venture we started last year, which is a pumpkin patch for pick your own pumpkins, which operates alongside the maize. And then right to the screen, we've got a picture of the maize from one of the bridges. Next slide, please. Right, so harvest 2021, we're going to, all of our crops we grow are all aimed for the feed market, mainly because we're too far away from distilleries, breweries, and also bread makers to be growing a premium barley or wheat. And we've got a lot of animals in the southwest, so we're mainly aimed at the feed market. So harvest 2021, feed winter wheat, we're looking to be selling 180 tonnes. Winter barley, 210 tonnes. Winter oilseed rape is looking to be 56 tonnes to sell. Spring barley again for the feed market, 130 tonnes to sell. Spring beans will be retained on the farm to be mixed in with a barley and bean ration to be fed to the cattle enterprise, because we're a suckler herd, finishing everything fat, and we also rear calves and finish those to fat. Forage maize, which is grown on the farm in the rotation, as well as grass lays and clover, is all retained to be fed to the beef and sheep enterprises, which is, the beef and sheep is probably half of our farmable hectareage. Over to grain storage. All grain is stored on farm. We've got enough storage and capacity to store all grain and all crops, which gives us flexibility for when we want to sell. So when we feel prices are right to sell, we sell. We're not forced to sell everything at harvest time. We operate a 12-ton batch dryer. We are over capacity on combine, so we find that we don't need to dry overly much, probably anywhere between 20 and 40% of what we harvest we have to put through the dryer. Next slide, please, Christian. Right, over to grain marketing. Open field market all of our grain for us, but myself and Dad have the final say of when we decide to sell. We keep a percentage back to feed into our livestock enterprises, and we also sell a little bit to local farms which haven't produced enough for themselves or aren't producing. We monitor daily grain markets and world trends daily. We're always keeping an eye on either whether it's through Farmers Weekly, AHDB, We've got a good relationship with Open Field, and they always give us a nudge if they think we perhaps should be looking at selling. We generally start selling our harvest crops in the January before we've harvested them. Once we know what our benchmarking cost of production is going to be, and if we can see a return in our cost of production, then we'll perhaps sell a third of our final tonnage before harvest. We'll generally sell a little bit at harvest and then sell the remainder after harvest once we know exactly what we've got in store. We're always very careful not to oversell. We always sell on spot prices. We don't use pools. We've found we've not done so well in the past through selling through pools, but we always have put the oats we've grown in the past into harvest pools, because we're fully aware that as soon as Morning Foods have stopped taking oats, that there could be a price problem or struggle to shift them. Next slide, please. That's me done. Thank you very much for your time and for listening. And if there's any questions, I look forward to answering them at the end. Or if we don't hear through the questions at the end and you want to ask me any questions afterwards, please feel free to drop me a message or an email. Thank you.
Thanks, actually, that's great. There are some questions coming in, and I'm thinking one or two myself as well, but I won't break my own rules, and we'll keep going. So we'll move up country a bit north to Rick Davies now in Northampton. And Rick, look forward to you sharing your story and how you approach the subject of grain marketing.
Thank you, Philip, and thank you, Ashley. Good evening, all. Hope you can see me all right. My lighting's not the best in here. Next slide, please, Christian. So, yeah, as I think we've all alluded to as we've gone through the evening, I feel that pretty much the day you plant that crop, depending on the establishment, either date or the conditions of planting, and the day of sale is pretty much the most important 2 days of your financial year. And I think sometimes we often forget that. We're in such a mad rush to get a crop in the ground, and sales and marketing can often get a little bit left behind. And I think, as David's probably pointed out, there is a psychology which we probably don't really ever think about. And I think sometimes it'd be probably quite good to write some of these things down as to why we make these decisions. Next slide, please. So we are predominantly arable farm. As you can see the cropping there, we are just shy of 400 hectares, 140 hectares owned. So we're effectively 1/3 owned and 2/3 on FBT. I've got a small herd of red poll cattle, which masses about 25 at the peak, just buying in stores, fattening and selling as in the box beef. We've also got containerised storage on the farm, 4 industrial units, and then we've got an office park, which was some old pigsties we had from the 1980s, and then adjacent to the farming enterprise or those diversified incomes, we've got my brother who's got a turf business which is set up on the same holding. So you can see from 2021 we are very heavily wheat based. A lot of folks say it's not sustainable. Would normally have a good chunk of 40 to 60 hectares of spring barley in there, but in light of the possibility of a no-deal Brexit, I opted to pull the pin on barley this year, and also with a strong wheat price, I thought we'd go another 50 hectares of wheat, so it looks very top heavy in terms of wheat. We lost oilseed rape 3 years ago, or struggled to grow it, so we planted 80 hectares in 2017, I believe, and we combined 6, which averaged 1.6 tonnes a hectare, and I think that 1 6 hectare field lost us over 3,500. So going forward, we thought, well, actually, we're going to cut our losses. Moved into spring beans, primarily because the pulse is good in the rotation, and also we just felt that we needed a bit more of a stable income So it's a real shame. Losing rape has been a big loss to the marketing of our grain, and we'll come to that shortly. We've also got some grass in there, which we sell. 17 hectares of grass effectively sold to a local dairy farm, and the permanent pasture I use for my own cattle. Next slide, please. Storage. So historically, the farm that we moved to in 1988, we built at that time 1,000 tons flat store with a continuous flow dryer. Then in 2014, we took on 180 hectare FBT, and we put up a 2,500 ton flat store. And then in 2017, we took on additional 2,000 tons as basically a tractor shed / overflow, and also wet grain handling effectively. Continuous flow dryer to all stores, which is fantastic. It's not the biggest dryer in the world. At 18%, we can probably rattle it through at 12 to 14 tons an hour. But if you can keep it running throughout the night, it'll get you through the worst of the spots. And also because the sheds are surcharged fill, we can just leave it ticking away day and night. You can see at the bottom there, annual output, wheat, sort of just over 2,500 tons of wheat in a normal year. This year we were 1,900. Barley usually around about 200 to 300 tons, and beans roughly 200. Next slide, please. So this is just to give you a quick overview of our yields. We've had a couple of tough years in there. Nothing more so than 2020. The first wheat yield does look pretty strong. It was only on 45 hectares, so following beans on some early drill wheat land. So I was pretty pleased with that. The remaining area of wheat is made up of second, third, fourth, and fifth. And again, we've averaged just above 7 tons a hectare, which, given the situation, given the year, and given some of our fields which averaged between 4.5 and 5.5, I was pretty pleased as an overall average. You can see there our oilseed rape. We've never been able to achieve 5 ton like a lot of folks up in the Midlands, but as you can see, it tailed off from 2016, 17, 18 dropped down, and then 19 just fell off a cliff. So cut of losses while we were ahead. Spring barley, again, we've had some good results with that over the years, largely growing that on the floodplain, so some pretty strong land, and in a reasonable spring, as long as it doesn't come too wet, can achieve some good yields. The spring beans at the bottom there, you can see we've just grown for 2 years, and we're currently averaging around about 4 ton. Next slide, please. Marketing. So, as I said earlier, reference the grain storage. We have the capacity to store 100% of our grain. But however, since losing oilseed rape in 2018, it's really hit the cash flow pretty hard. Obviously, we used to sell in the region of around about 400 tons of rape, often sort of September to October. Well, obviously, because we're not forced, we didn't have to shift, but it's quite nice to get a good chunk of money in the bank pre-Christmas, so it would take the pressure off selling the wheat. So we would often sell 100% of the rape forward, and then we could keep hold of the barley potentially till January, and then we could start moving wheat January through to June. Since we lost the rape, obviously we become forced sellers of beans and the barley. We generally clear out those before Christmas. And around about 500 tons of wheat. I know a lot of folks generally don't have a strategy, and you'll see some people will be chasing the market, and they'll be chasing it until the last day of July. For us, we try and sell around about 40 to 50% forward pre-harvest, and if in an ideal world between October and December. So we're opening ourselves up so we can try and play the longer game for the rest of that season, from January through to June. I try not to chase the market. I try and be consistent. It's not always easy when you see these peaks and troughs. and it's very hard sometimes to stick to your guns. But as we all know, we need to find that good average. Some days we do it, some days we don't. I think we all probably know, once we've been through the combine or we've finished combining, we've got a fair idea as to where we are, where our cost of production is as a ballpark. I mean, this year our wheats across the board averaged 7.4 tonnes, I think, across the farm. Already, you know that we're 25 to 30% down on our 5-year average. You already know that it's going to be a season where you've really got to tighten your belt and push for some big prices. Pretty difficult when we were at that point, 55 to 60% sold at harvest, and on the back of a poor harvest, you're then staring down the barrel at 80% sold. So it doesn't leave you much wiggle room, which I'm sure I'm not the only person to be in that position. But I think you need to be balanced and measured approach, and don't be too reactive in that situation. One thing I've found over the years, I've sort of forgotten the round numbers, and I use 3s and 7s as my targets, primarily because you'll be chasing 180, 170, and it either seems to never get there, or for some reason it doesn't seem to, the trigger seems to never happen. So I often chase 3s and 7s. David also mentioned earlier options and puts. I have looked at these numerous occasions, but sometimes it's quite nice just to physically close a sale. And I agree there's huge benefit in looking at these, but it's nice to say, well, actually I've just sold 400 tonnes for November, and that's closed. You're happy with the price? That's the day of sale, and it's closed, put to bed, done. From a psychological point of view, options and puts, you then open up the dialogue. It's going to be, you've started that point, but going forward, you've still got to potentially keep an eye on the market, and you've still got to close that sale, whether it's going to be up or down. And there's also the risk of you coming back, and potentially that option could have cost you £7 for no gain. Next slide, please. Advice. Basically, we signed up the ODA three years ago, and we've found them to be really invaluable from the point of view that giving impartial advice, not led by anyone in the industry, and I think it's been really quite helpful to glean information from other parts of the world where you often hear snippets and bits and bobs, but it's nice to get clean, sound advice from them. I wouldn't say I always stick to it. Like anything, you've got to have your own kind of autonomy. But with a combination of the ODA advice, AHDB marketing bulletins, weekly, daily, speak quite closely to Haygates, who are our local mill. We sell probably in the region of 80% of our wheat to Haygates. Pick off bits off Twitter, stock markets, looking at the stock markets, the dollar versus pound versus euro, and trying to predict what's going to happen going forward, which has been, in the last couple of years, surrounding Brexit and Donald Trump, has been a bit of a minefield. I also use Viterra Grain app, which is fantastic for looking at spot prices. Gives you a 5-minute window to lock in a price, or also you can use that as a bit of a guide as to where the market is before you ring up the trader. Sales, like I said, Haygates, we probably sell around about 80% of our milling wheat to them. We also use Frontier, Viterra, United Oilseeds for our beans, and then I just sold a couple of loads with Graindex, which is due to go in February this month. Again, I did that primarily because I wasn't happy with what my local home was bidding me. They were full up at the time and weren't quite as hungry for wheat, and I just felt I wanted to try something, and this is the great opportunity to have a look at it. And I ended up selling 2 loads of wheat, full spec Zayat, for just shy of £6 over and above the market on that day. I could have been greedy and got another £3 a tonne, but it would have gone to the borders. I felt that was a little bit too far, even though I was pretty confident in the spec. So I ended up selling it to Lincolnshire. So I felt it was a medium ground, but again, like David said, I wasn't going for the highest price. I was going for a sensible price that I'd be comfortable to let that lorry go 80 miles up the road, not 250. Next slide, please. And that is my lot. So any questions, please feel free to open it up to the panel.
Okay, thanks, Rick. Great. A very different situation to Ashley, and I think we can draw quite a lot of comparison discussion out of the two there. So we're all back on screen now, and we've got good time for questions. We've got plenty of questions here to ask to kick off with. David, I'll ask you the first one. No, so before I do that, I want to remind people actually that the basis and rows of points to get your points for the meeting tonight, put your details in the chat function on the right there, or if you don't get time to do that tonight while you're listening, email me on philip.dolbear@ahdb.org.uk, and we'll get that sorted for you. So yes, question for you, David. We don't hear much about pools nowadays. Are they basically a thing of the past?
It's a good question. I guess there's kind of the structure of the grain industry has changed. I think the structure of on-farm storage has changed. If you think of, say, 20, 30 years ago, the classic merchanting trade was to buy grain off farm at harvest because there wasn't available storage, and then put it into a pool, put it into a store, and then take the carry through the season. But as Rick was just saying a few minutes ago, there are farms that's increased their storage capacity over recent years, and it affords a more flexible marketing strategy. So I think in some ways pools were a requirement of the structure of the industry at the time. And I think that a lot of growers have increased their own on-farm storage to give themselves that flexible marketing option. They don't have to move grain off of farm at harvest, which means that they're able to market it in a different way. But that doesn't necessarily mean that pools are over. And I think it comes back to something I was saying earlier around flexibility of marketing strategies. It may be the prudent thing to do to have a small proportion of your grain in a pool to spread some of the risk. In the same way of, if you're thinking of it of investing in a pension, you don't put all of your money into a single pension or into a single thing. You spread your investments around to try and spread your risk and spread your gains and spread your opportunities as well. So no, I don't think pools are a history. I think they've got a place, but I just think that the way that farm storage has modernised and increased probably means that they are less required than what they were previously.
Okay, thank you, David. You talk about investment there, and both Ashley and Rick, you've both invested in grain storage. But come to you, Rick, first. What's your sort of thought process about putting your hand in your pocket for some quite big sums over a long-term decision? What's the sort of thought process about making that size of investment?
In terms of grain storage, Philip?
Yes, yeah, grain storage, yes, to have the flexibility for marketing.
Yeah, well, that's primarily it. I mean, we were forced, well, not forced, but taking on the FBT in 2014, the farm didn't come with its own facilities, so we had to put up storage to cater for that. The second shed was effectively to provide us with the ability to store more grain than that harvest, if you like, so we could carry over in the situation where it would be feasible to do so. But it also gave us a number of options if opportunities came up locally in terms of taking more land on. And I suppose it was also a combination. My brother's turf yard was dominating the next door yard, so we had to almost build our own farmyard next door. So it's a combination of factors, but it's given us a great position. We're in a great position basically to store a lot of grain going forward, and put ourselves in a strong position if that was to arise.
Okay, thank you. Ashley, a question for you specifically on oats. and I've lost it now. It was regarding whether you'd thought about marking them on contracts based on wheat prices, wheat futures going forward.
Well, we've actually dropped oats out of the rotation now, so we no longer grow oats. We have had this chat about basing a contract following a wheat price, and definitely I think if we drop oilseed rape out of the rotation and go back to growing oats, that is definitely something that we'll look to do. Definitely.
Okay, thank you. Feel free to butt in from me. I've got plenty of questions lined up here, but if you want to ask questions of each other, do so as well. It can be a four-way discussion. In the absence of that question, I'll ask David a question. You mentioned the difference in price between the futures market and ex-farm price and refer to £2 per tonne. Is this the basis price? But my basis is more likely to be £6 to £7 per tonne. Why is this?
So I think I was mentioning delivered premium. So futures market is your sort of baseline for pricing, and then when you're selling on a delivered basis, so 29 tonnes delivered into flour mill, whether that's Haygates near Rick or whether we're talking about a feed mill near Ashley going up to Ufcombe and Plumpton kind of area, then they trade on the basis to futures for a delivery. So East Anglia is generally trading around £1 to £2 over futures on a delivered basis. And as I said, Yorkshire trades about £5 to £6 over in a normal season. In years like this year, where we have a much smaller crop, that delivered premium really stretches out in the north of the country to attract grain from the sort of centre and east up to A1 and north. And then your basis to futures from an ex-farm level is calculated then from deducting the haulage from that. So if futures were at 160, for instance, as a round number, if we were trading in Yorkshire and it was a £5 delivered premium, the value of the feed wheat sold into an animal feed mill would be 165. You then deduct haulage from that to get to an ex-farm price, say £7 haulage. So that would then be 158 ex-farm. That would be £2 under futures, so you'd have a £2 basis. If it was East Anglia and you were trading at 162 delivered in at a £7 discount from haulage, then that'd be 155 ex-farm and you'd be a £5 basis. So the basis is relative to your delivered premium. That's the key thing. The delivered market essentially is the true market for grain. The ex-farm price is then just the basis of haulage off of that.
Okay, thanks, David. And then Rick, back to you. A couple of questions here on some of your grain marketing outlets. Somebody's asking here what the Viterra grain app is because he can't find it, and also perhaps you'd just like to share a little bit more with your thoughts about what made you choose GrainDex to market some grain this year.
Okay, so yeah, Viterra is obviously, as was Glencore. So it's called Grain, I think GrainMate, I think it's called. So again, it's an online feature which works on my iPhone, and it just works really well. You can look at Chicago, you can look at Paris, you can look at the London markets, and then you can get bid a price for every month for the new season, the new season 22, and then also old crop. So you've got a spread of 3 years that you can fix in any month. It'll give you a price on well, straight away basically. You've got 5 minutes to lock in that bid. So that's Viterra, or GrainMate, basically it's called. I'll try and find details later if it's not obvious on the App Store. And then the second question, I decided to choose on GrainDex. Decided to sell some on GrainDex because I wanted to clear the back of a shed, and the price that I was bid for February movement I didn't feel was satisfactory, and I just thought it's a good opportunity while I'm fairly committed. I'm 94% sold, I think, at the minute for 2020 harvest. And I just felt it's a good opportunity to try something new. It's quite low risk. It's only 2 loads. I'm not really forced to sell. If I didn't get a good price, I wouldn't have sold. And I just thought it's something worth looking at. And actually, I've been pleasantly surprised how easy it was and how straightforward. And it's going forward. I'd like to potentially use it in the opportunity where there's the changeover between old crop and new crop. It's a really grey area sometimes, and often you'll be bid a price. I mean, for instance, if you look at futures now, it'll probably be around about £200 for June, July, and then new crop will just drop off round to about, as available, might be 148, 150 if you're lucky. And in that kind of week or 10-day period, I'm hoping that by using GrainDex, you'll be able to find homes that are really desperate for grain, really short in the short term, waiting for the combines to roll, maybe up north or up in Scotland. And I think for me, that kind of week period, I might be able to make some pretty significant sales. We're quite an early farm anyway, we're quite light. So I'm hoping I might be able to sell 200 or 300 tons on GrainDex potentially in that bracket where you're sort of in the middle ground of new crop and old crop. So that's why I wanted to try it out now.
I think that's a really interesting point, Rick, when we're talking about, again, the perception of risk and the risk you're willing to take on, that you're sort of going into what would be, deemed as a very risky time in the season, but with kind of a thought process beforehand, because I'd agree that there could be some opportunities in that, last week of July, first 10 days of August, especially, people that have sold equal daily quantities into mills in the north of the country, and suddenly there's not a lot of wheat being harvested. If we get a week of rain in Europe to slow the harvest, then given the minimal stocks that we will have, you've got to expect could be some desperate people searching around for some grain at that point. And I think that comes back to what I was saying earlier, that it's an appreciation of risk is what you've got to be willing to take, that by taking that step and going down that route, then the other side of that is there's a risk that market doesn't happen and harvest floods on in the first week of August and that market disappears overnight. So understanding that risk reward balance, I think is a key thing to making those decisions.
On that, David, I was offered £205 for the first 10 days of August. I mean, that was a full spec milling, and you think, well, that's a fair price, but I can't guarantee that I will have 200 tons available in that first week of August. I mean, 90% of the years we would have, but I don't want to be in a position where it's non-defaultable and they need that grain in the mill tomorrow. So for me, I thought it was a great opportunity to look at something different, open my horizon slightly, and maybe stretch further afield than my local mill or my local grain trader. Because I think sometimes we can be quite blinkered. We might bring around 5 people, they all say no, or this is the price. You come away a bit disgruntled, and then you go, I'm not going to sell. Whereas I think GrainDex has kind of opened my eyes a bit to looking a little bit further afield, and it opens you up to some of the regularities of grain moving around the country. So for me, I think it's been really interesting.
Thanks, Rick. A question now to all the panel, actually, and I'll start with Ashley. I'm a new farm manager with little experience in marketing. Harvest 21 will be my first harvest. Do you have any personal rules you would recommend to follow as a starting point?
Yes, definitely. Don't oversell. Make sure you know how much you've got before you sell the final ton. Yeah, you need to get some good companies. I don't know where you are, but perhaps get Open Field or Frontier behind you, which can help you with your marketing. You need to follow your guts, and if you make a decision, think that you made be sure you've made the right decision when you have, and that is your decision, and that is the right decision you've made. There's no point doubting what you've done. So good luck.
Okay, Rick, you points
Yeah.
on that?
Yeah, I think similar to Ashley. I think as David probably alluded to earlier, the day you make that sale or the day you start making some sales, write down your thoughts and feelings on the day, why you made the decision, because sometimes I find the hardest part of marketing is the first lot, if you like, is drawing that line in the sand. Once you've made that sale, you can then judge accordingly for the rest of your marketing for that season. But I think once you've made that initial sale, it's you've got a good starting point, and you can either, hopefully that's your poorest sale of the season, and going forward it's all upwards. But yeah, I think take plenty of advice. The difficult thing these days is there's so much advice out there. It's knowing what advice to take, and I think sometimes you've got to look at the fundamentals that are out there and try and come to a reasonable conclusion as to where you think the market is and where it's going. And like Ashley said, don't oversell. You don't want to be any closer than 75% really prior to harvest. Maybe 60, if I'm honest.
Okay, so both of you, go ahead.
Sorry. Yeah, and also make sure you know your cost of production, because if you know your cost of production per ton, then you can sell and hopefully get a good return on your money you've already invested.
You've just redeemed yourself, Ashley. I was going to send you both to the AHDB naughty corner for not talking about cost of production and farm bench. But David, do you want to bring anything extra to those comments from Ashley and Rick?
No, I was going to do the same thing and bring them up on cost of production. That's exactly what I was going to come back with as well. You've stolen my bit as well.
Well, sign up to market commentary then, and the advice of AHDB.
Yeah, definitely. I guess the other thing as well is, I suppose following on from what Ashley was saying, you've got your cost of production. You know it's costing you, let's just say £140 a ton. Fully costed up for producing a milling week, for instance, just as a hypothetical figure. You've then got to have that conversation as a farm manager with everyone else in your business, and to say, okay, well, what's our risk appreciation as a business? What are we trying to achieve? Are we trying to maximize profit, or are we trying to create a build-up of cash reserves? What's your aim in your marketing, rather than just going in blind and kind of just hoping to get the best? And I think whatever decisions you're making this year for 21 harvest, probably fully understanding that you will need to making different decisions at different times for the 22 harvest. The market will be reacting to different things. There's never one pattern year on year that happens. So anything that you do for this year for 21 might not work in the same way for 22 harvest. And that's both a good thing, because it means there's new opportunities that come up, but also and coming back to what Rick was saying, don't beat yourself up about it. If you make a bad decision, or you make up what you perceive as a bad decision or a wrong decision with marketing for 21, there's other opportunities that will come. So don't get disheartened if you feel you've made a bad decision, because there's always other opportunities out there.
David, this might be an opportunity. You've already alluded to some market commentaries that listeners can register to receive on a regular basis. But in March, you and we in HDB have got some more concentrated output on grain marketing coming up.
Yes, we do. We are holding a grain market outlet seminar on the 9th of March, and we'll be producing a lot of content around that as well. So it's all available on our websites and links to our emails to sign up to, where we'll be giving just over an hour with presentations and question sessions as to what is driving the market in detail, and giving a bit of a longer term view as to what's going to be happening over the next 12 to 18 months. So that's our spring grain market outlook seminar on the 9th of March. And I think it's a key thing is coming back to what both Ashley and Rick have said, is they've got a marketing strategy in place. They've got a structure in place in terms of how they manage the sale of their grain, but it's not something that they do in isolation. And I think this comes back to what we were mentioning earlier around both understanding what's driving the market, but also from that you know, mental health aspect of having an open discussion about it and not getting sort of closed up and worrying about these decisions. That if you have people that you can talk to, whether that's in a professional sense of trading with merchants, or whether it's in a social sense, or whether it's even, you know, coming to the webinar we're doing in March to have a discussion and understand what's going on, multiple sources of information will be the best way to navigate through the volatile markets coming up.
Thanks, David. We've had a question about how do you know your cost of production before harvest? Well, effectively, you budget all your costs in and put in your 5-year rolling average yield, and that will give you a budgeted cost of production per tonne, which you can then keep reviewing as you go through the season. The crop develops well or less well than you anticipated. Time's starting to beat us, so some quick fire questions. Ashley, you're obviously in the feed market. What wheat varieties and oilseed rape varieties are you using?
Sorry, yeah, I should have said earlier. Feed wheat, we're Sundance, Extaze and Skyscraper on our heavier clays. Oilseed rape, we're growing conventional and hybrid. The conventional is Aspire, the hybrid is Ambassador. Both get on very well with both varieties. The Ambassador is a cracking hybrid, and the Aspire is equally as good on the better ground.
Okay, thank you. And a question to Rick. You're top heavy on wheat. You've got a lot of wheat in the rotation this year. What's rotation 2022 going to look like?
So we will have, again, a significant amount of wheat. We're primarily using a lot of sewage cake in our rotation. So we're using sewage cake ahead of our second, third, fourth wheats. So next year, I think we've got 70 hectares of spring beans, 70 hectares of spring barley, which will leave the balance around about 210 of wheat. But again, all the bulk of that wheat will either be after beans or it will be after sewage cake. So we're kind of using that imported fertility to try and see those second, third wheats through the dip off of table, if you like. So we will probably continue to be over 55 to 60% wheat.
Okay, thanks, Rick. And a question for David. Multi-barley is obviously a big crop in the UK. What's your thoughts on that crop for the next harvest going forward?
The 21 harvest. Well, I suppose in some ways, actually, there could be a bit of a change around in the area being planted, because we had a huge spring barley area going in for harvest 20, but we're expecting that to reduce for harvest 21, purely because of the increase in wheat area and a move to a more normal split of winter-spring rotations. We're seeing a reduction in demand from the brewing, malting and distilling sector because of the impacts of COVID. I think there's some reasonable premiums that are out there at the moment for new crop, probably as a uncertainty over crop condition more than anything. So yeah, I think it's probably in a better place than it's been for a while, purely because we're probably seeing a smaller crop that will be going in the ground. But as ever with malting barley, it entirely comes down to the relative quality. You can have a great growing season and end up with a really variable quality crop. So you know, I think the thing, again, when we're talking about marketing grain, and I suppose actually there's another piece of advice to the guy or they were talking to earlier, who's the first season, understanding how to control defaultable and non-defaultable contracts is a really important thing. You know, selling malting barley as a fixed price pre-harvest can be very risky given the quality changes that we see. So yeah, probably more positive over malting barley than what it's been for a while, just because we're seeing a smaller crop and that could offer some more reasonable premiums.
Okay, thanks, David. I'm afraid time has beaten us, folks. So what I will do is all the questions we haven't had answered here, I'll go through them and reply to you by email for those. Just a reminder, it's speed typing time if you haven't put your basis and rows of points into the chat line there. Just move forward a slide, Christian. Just a reminder that in the right there, there's also the publications which we attached to this webinar, but they're also available on the AHDB website around the topic of marketing there for you to use. And likewise, going on to the website for the details of the forthcoming webinars. That link at the bottom there will take you to the programme of Monitor Farm Mondays remaining for you to catch up on. Outside that programme, there are a couple of other webinars to draw your attention to. Sadly, the Milling Week conference will not happen in the flesh, so to speak, but the output is still very much there digitally, and that's happening over 3 days, the 23rd to 25th of February. And for those with more specific interest in oilseeds, that's on the 26th of February there. Again, all these links are on the website. If you can't find what you're looking for, or you need some help, my colleagues around the country there, you'll know them in your area, I'm sure, but they're always pleased to help you, and good to keep in touch with us, and we'll keep in touch with you and make sure you get all the information you need. And another plug stroke reminder, be really, really grateful if you could complete the Monitor Farm survey. It really does help us fine tune and make hopefully future output even better than it's been this year, but we can't do that without your comments. So all that remains for me to say in conclusion is to thank Rick, David and Ashley very much indeed. Really appreciate your input. We could have gone on all evening and expanded the discussion considerably, I'm sure, but we're fairly limited on time, so I hope that's been a taster and given you listeners some food for thought going forward. Thank you for listening, thank you for taking part, and hopefully we'll see you next week for the next webinar on data management there. Thank you very much. Good night.